All right, welcome back to Market Day Report, Market Day Solutions. Wow, I can't believe I said that. Market Day Report, how about that? Well, we've had overnight action, a lot of green on the screen here this morning. That's good, right? I think June 14th was the tell. When we opened up higher Sunday night, traded higher Monday morning, and then added to those gains on Tuesday. That was the first time that's happened since June the 14th, and that was really signaling some strength for us. So let's take a look at what we did overnight. That's going to be an interesting one, too. Look at this, corn up 13 3/4 cents in that SEP contract, 628 3/4. That's just a tick off the highs there, folks. So that's some pretty good going. Even D's 13 3/4 cents higher, 632 3/4, and again that's about a half cent off the highs and making that way to 650. Boy, I mean, it was last Friday that we thought, oh, this was looking pretty ugly. How about soybeans? This is even better, right? 40 3/4 cents higher in that August contract overnight, 1650 is last. That's the high. Go out to November, the new crop, 25.5 cents higher there, 1466 even. That's well over that 1450 mark I talked about yesterday. I can't believe how well this has really actually performed, and the depths of everything was where the depths of everything were last weekend. So really a hot and dry market here. This is going to be weather. It's trumping everything, trumping the dollar, trumping the interest rate hike, trumping the recession. That's some pretty good going. How about wheat? Let's take a look at that in Chicago. Chicago wheat, 22 cents higher in SEP, 839 evens last. That's 6 cents off the high, 7 cents off the high there. Go out to the middle of the curve or middle of the mid. The deferreds. March up 21.5 cents, 873 even is last. 6.5 cents off the high there. How about hard red wheat in Kansas City? That's another one. 20 cents higher there in SEP, 909 3/4. March up 19 3/4 cents to 919 3/4, 6 cents off the high there. So doing pretty well across the board here. A lot of green again on the screen. It'll make this job a little bit easier here today. 15 3/4 cents higher in the spring wheat in Minneapolis. That's 943 3/4 overnight. We've got the D's up 15 1/4 as well, the 955.5. And finally, cotton. You know, this really is having a hard time getting anything going. It's up 48 points here today, but that's pretty measly. 96.69 the D's contract. So let's bring in Brian Hoops from Midwest Market Solution. Brian, thanks for being on the show here first thing on a Friday. I really appreciate it. Well, what are your thoughts here? I mean, it just seems as though we've just kind of left everything in the dust from this time last week.
Yeah, good morning, Scott. It's been a real strong week. You know, we were talking a week ago about soybeans below $13. We've had a heck of a rally here. Now, we're going into a weekend, so we may see a little bit of profit taking coming into this market from the standpoint that, you know, concerns about Sunday night, next week's weather, if there's a weather model change. So we could encourage a little profit taking. Plus, the dollar has been trending lower. In fact, overnight we went to the lowest level since July the 5th, and then we started to rally. In fact, we're trading higher now, bouncing off of a 40-day moving average. So that could be a little bit of maybe a resistance point, call it, for the grains. The dollar that has been trading lower, I think, certainly has helped to encourage some fun buying in these grain markets along with the weather. And so the higher dollar and maybe just concerns about that change in the weather pattern could give us some profit taking. But right now, it looks hot. It looks dry for next week. The ridge is setting up to keep a lot of areas very warm, very dry. And it looks to curtail both corn and soybean yields next week.
Yeah, and you know, to your point, I mean, it seems strong. I mean, look what we had to deal with this week. We had some inflation figures out this morning, which they were mildly worse than expected. So inflation's still around. We had a 0.75% base rate hike, on Wednesday. Bad news about the economy yesterday that we're in a recession. All those things, adding up, and then look what we've done on these contracts. I think it goes a long way to saying that, you're right. They trump all the bad news plus the dollar, and that means it probably is pretty strong. Really is a good base.
Yeah, it certainly has, and we did have an export sale this morning of soybeans to China. That's a new crop variety.
Right.
Our weekly export sales for new crop were outstanding. And so I think, China and some of these other countries are going to be in the market trying to get some coverage in case the weather does stay adverse during the month of August and these yields come in smaller than expected. It just makes a lot of sense for them to get some futures bought, get some cash product booked. And just in case the prices do shoot higher through the fall months and into the winter.
Gotcha. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk about what we might open up with here when it comes to livestock. We'll be right back. All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy, and every now and again I cheat a little bit and use that as a segue into taking a look at these livestock prices. Now, they didn't open up overnight, but let's remind ourselves how we did yesterday. Let's take a look and see what live cattle did, and it was quiet all day yesterday. We were just a little bit easier. So all day I called this steady easier. We didn't have a really big range. Look at that, August, just over $1. December, not even a buck. So that means it was just one of those dead quiet days. So nothing happening there except for the fact that we were just a little bit easier across the board by, say, 40 to 60 cents. Let's take a look at what's going on, or what did happen in feeders. We're about $1.50 to $1.85 lower across the board there. That was because the corn was strong, and I expect that probably be again the same today. August was off $1.67 to $177.42. Yesterday, October was off $1.75 to $182.72. So we've got a stronger corn board. That'll probably pressure this a little bit more on the open, but we're going to wait and see what Brian Hoops has to say about it. We had lean hogs. Fronts were up 52 cents. That's August, but we'll look at October. That's down 12 cents, and we were between 12 and 60 cents lower across the board when it comes to lean hogs. So, Brian, let's bring Brian Hoops back in from Midwest Market Solutions. You got any feeling about how these will open up here this morning?
I think with the higher corn, we have to call feeder cattle lower. That's going to spill over into live cattle markets, the cash trade on a dress basis, and in the Southern Plains coming in softer than a week ago. So you're looking at $1 to $2 lower cash trade combined with higher corn. You're going to put a little pressure against the fat cattle. The feeder cattle, I think, will be down this morning, unless we see a massive sell-off in the corn. There's probably not going to be a lot of buying interest in those feeders. Now, the hog market, the cash markets remain strong. We saw $12 higher quotes yesterday at midday, but the futures really didn't respond. And I think they probably will try to, going into the weekend today, see some short covering or some buying interest in some of those deferred hog contracts.
Yeah, it's going to be a pretty interesting time. I think what these livestock markets are going to wrestle with, where does this economy really stand, right? We've seen more and more job cuts, or at least hiring freezes. We've seen the recession news. We've seen the interest rate hikes. It's been buffeted with a lot of bad news, but I also hear a lot about, herd liquidation. Even one analyst came on the show yesterday and said they're not even trading futures anymore because they sold everything they have, right? So that's pretty bad. And so it'll be interesting to see how these livestock prices kind of, weather that storm, because I think there's some pretty big stories on the horizon.
Yeah, we've been recommending to our clients to do something in the live cattle and the feeder cattle market. These feeder cattle values above 180 seem attractive. There's some 190 prices out there into the spring. And the same thing with the fat cattle. We talked yesterday about doing windows or fences, as we talked yesterday.
Yes.
Doing something to get some coverage out there in place, because the upside looks to be somewhat limited because the economy, despite the smaller numbers of cattle that we'll see into the fourth quarters of this year.
Great stuff, great content. Thank you very much, Brian Hoops. He's coming to us from Springfield, Missouri. We're going to bring him back here to Nashville again, so I can throw this over to Good Morning Janet.